Everyone. Welcome back to Red Panda Investing. And today we're going to be looking at the company Meta. So what is Meta? Honestly, I hope at this point everyone knows what Meta is. But just a brief overview. Meta is essentially a conglomeration of social media platforms. We have things like Facebook, Instagram, WhatsApp. And from all of that, how do they make their money? They make it off of essentially their advertising business. All of that is really profitable. You say the name Meta, you say Facebook, you say Instagram, you say WhatsApp. 90% of the population that we talk to on a day-to-day basis is going to know what those apps are. And that has been entrenched in our daily, basically, lexicon, even for people who don't really think of themselves as being online that much. So, headwinds and tailwinds before we actually dive into what the fundamentals of the companies are saying. So, headwinds, the depreciation of data centers. It's been one of the biggest headlines out there for the past few years, where with the massive amount of spend that Meta has put into data centers, and that depreciation hasn't really hit, which we'll see right in the margins later on, but it has hit the free cash flow already. And with that hitting the free cash flow, the depreciation will eventually trickle down into a decreased amount of earnings, or at least a decrease in the margins. Regulations on Meta with their essentially monopoly on social media, right? They have Facebook for old people essentially, and developing countries. You have image sharing with Instagram, and then you have basically messaging with WhatsApp. All those together make them a pretty big target for regulators, especially for regulators who want to reduce the amount of screen time that teenagers actually are exposed to. For example, the regulation that was passed in Australia restricting teenagers on social media. So they also have a really high expectation of growth, right? That expectation, because their expectation is in there, right? Obviously, that intrinsically means that the price is going to be raised up, which is a headwind for the company and for the stock price. And finally, one of the last ones I want to get to is Reality Labs and Metaverse. Both of these have been money sinks that Mark Zuckerberg has really jumped into, but they really haven't given any strong returns just yet. I think this could turn around in the future, and that headwind could actually turn to a tailwind to help Meta in the future. But as of right now, they've been money sinks that haven't produced much return. Tailwinds from Meta. This is going to be something that is somewhat interesting. Not particularly, but they have two areas that I say are pretty strong tailwinds. One of them is AI tools, right? Meta is predominantly using software, which now with the current event of ChatGPT, Claude, Sonnet, all these generative tools, right? Coding becomes a lot easier, and it means that they can get a lot more production out of the same talent pool. In addition, they can use AI to help generate and improve their advertising business. Whereas before, a company might have to go to an external source to create their advertisement, then port that over to Meta, right, to put a spot for the advertisement. Now with AI generated advertisements, Meta can own both parts of that, right? They can get more of that pie and essentially vertically integrate the entire ad buying and ad producing process. Of course, not every single company is going to be doing this, but that being an option for Meta to increase their revenue is an opportunity for them to increase revenue. Finally, we also get to a strong and growing user base, right? Like I said before, you want to post something, you could post it on Facebook. You have groups on Facebook. Uh, if you want to post images, there you go. You have Instagram. You want to communicate with your family back home across the world, you have WhatsApp. And as more of the world develops and more people come online, where are they going to be going to, right? They want to be able to share their stories and they want to be able to reach people, right? It's a human condition to want interconnectivity, and Meta really sells that. So their strong growing user base is also to be a really target for advertisements. Obviously, the more people you get eyes on, the better the ads do. So that's a really strong tailwind for Meta. But headwinds and tailwinds don't really matter if the fundamentals of the company are bad. All right, so let's actually take a look at the fundamentals. First off, we want to take a look at the revenue and the profit. All right, the revenue growth has been really strong, right? We have 28% growth over the 10-year as a 10-year median, right? Or year over year growth with a 21% 5-year CAGR, right? really strong growth, really nice growth as for a company at Meta size. What we also see is their earning history, right? It's been skyrocketing recently after basically the year of efficiency from Mark Zuckerberg, right? We see this basically just not vertical lineup, but very, very strong and fast-paced growth. Part of it comes down to what we'll see later because of the margins expanding. And uh, well, let's just take a look, right? The margins and the PE, it's the other part we really need to take a look at to actually evaluate the company, at least from a price to sales, price to earning perspective. So they've had some fluctuating margins, right? We see that dip in 2023, going back up in 2024, and currently it's at the highest ever, at about a 40% profit margin. Uh, I mean, every single company, most companies would kill for a profit margin this high, and for Meta, it's slightly out of the ordinary, but it's not unexpected, right? The PE, right? The 10-year median PE is 27.5, 10-year average of 30. So really, if you want to argue, it should be 28, should be 29, should be 30, 31 maybe. I mean, within the range, same range there. It's been trading at around the same level for a while now. And what you'll see is it doesn't really matter which numbers you choose here. Uh, we do get similar results in the end. So let's take a look at what assumptions I'm going to make to project what I think is intrinsic value of Meta for me today. So I am going to project 20% revenue growth, which is lower than what they've had sustained, right? For the 10-year median or the 5-year CAGR. It's partially because it's hard to sustain growth rates this high. Um, Management has projected 20 to 24% growth this year in revenue. I'm going to take the lower end of that because I know how this type of margin, this type of revenue growth is not easy. I would not be surprised if they are able to sustain a 24% for at least this year. But then slower on in the next 5 years, it does lower down. So that's like the 5-year CAGR for the next 5 years is around 20%. That's still a really impressive rate, right? So just because I'm saying it's slower than what they've done in the past, it doesn't mean I have any ill will to this company. I think it's a great company, right? On the other side, I do think that the profit margin probably will decrease a little bit. Why? Like I said, this is because of the depreciation of data centers, which hasn't fully kicked in yet. The data centers are property, plant, equipment with a useful life of supposedly 5 years, and we're really into year two of this, right? And which means that last year's spending hasn't really all been captured in yet, and a lot of the capex spend has not been seen. A lot of capex spend from free cash flow that will see hasn't been captured inside of earnings. Of course, all this can be moot, but either way, we do see that at the end of the day, what this gives us as an intrinsic price is at about $788.18, which is similar to what's trading at now. But let's take a look at what its what we evaluate from free cash flow. So free cash flow has had strong growth. It's a lot choppier than you would like to see for a company with such steady revenue in there, like Meta, right? The 10-year median is about 10%. The 5-year CAGR is 24%, and we do see this giant fluctuation in the middle there with 2023 and then 2024 with year efficiency, yada yada yada. The 10-year median price to free cash flow is about 28.5. 10-year average is about 26. Once again, very similar numbers there. And I can't really argue with you if you go either way on that. So, but what we do see here is the last couple of years, or really last year, this dip, or last quarter really, the dip in free cash flow. And that's coming from the data centers. So we can see the free cash flow growth slowing and dipping due to the data center investments, but that hasn't really gone through into the the price or the revenue, or not the revenue, price revenue, rather the earnings. So that's why I reduced their margins a little bit in the previous slide. So given all this, what price does the free cash flow actually want, right? So it has a 24% free cash flow growth. I'm assuming 24%, which is due to the high end because I think they are going to be reducing the capex, which does mean that their growth is going to be faster. 28 price of free cash flow, which is essentially in line with the historical price, right? That gives an intrinsic value of about $889 or $890. Right? It's pretty nice. A bit higher than what it's currently trading at. Finally, let's take a look at the dividend analysis. Once again, this is a company where dividends, you're not buying Meta for the dividends, right? It doesn't really matter to most people. Um, so I don't know, I'm not sure if the table here is completely accurate. Even if it isn't, I put essentially zero weight into these. Just threw some numbers in here so we do have a table to look at, which is somewhat interesting. Not really, because we're not looking at it much. But 50% dividend growth, 1% ending yield does give us an intrinsic value of about $817.82. But I'd probably essentially just ignore it for the final analysis and the final valuation of the company. So overall pricing on it, Meta is currently trading at $750 about as of this recording. From the revenue, we get about a price of 788, and from free cash flow, we get a price of about 890 or about 900, right? So how do we? That's a relatively large discrepancy between the two. So which one do I really want to go to? I do think that revenue, at least here, is probably more indicative of where the market is going to be pricing Meta, right? Rather than free cash flow, most people are looking at that revenue. They are looking at the earnings that Meta is able to give. So I put a bit more weight to revenue here than free cash flow, but somewhere between that 800, 780, 790 to 900 range is probably fair value for Meta. Right now, I do think that overall, personally, probably around $800 is a pretty fair value for Meta. At a current value of about $752, I do think that it's a hold. I can make a video about how I determine buy, hold, and sell ratings sometime in the future. If you guys are interested, just let me know. And that'll be all for today. Leave a like and subscribe if you are interested in seeing me do more of my analysis on companies. And let me know what other companies you guys would like me to do an analysis on. Thank you so much.